Hey traders, what's going on? Actually, today I want to do a mini lesson on is all support and resistance equal and are they the same? Through my time is trying to learn how to be a successful trader and read and interpret price action, I learned about support and resistance. And no matter what, I kept trying to distinguish what is actually support, what is not support. I mean, I've read different books, different facts. I Googled different information on support and resistance to try to find out what is objective support, what is actually support. And coming through all of that, I found out that support and resistance is not equal. So instead of spending my time trying to see how I can work MACD or RSI or Bollinger Bands, these different indicators to react to price, I spent many hours and hours in front of a monitor, books, and information trying to determine what support, what price event should happen at these support areas to tell me of a possible trend change, to tell me that prices might be going in this direction. And based on reading price action, I was actually able to eliminate any indicators. I don't use the 200 moving average, any moving average to determine trend. I use price action. I use support and resistance, price pattern plus volume plus trend, which equals price pattern. And through those, I was able to determine. Now, here I needed to classify support and resistance because I couldn't just buy at major support or any support area. And some methods might allow you to do that, but I went through that stage in that area and it just was more of a hit and miss. And then I see prices coming up to a resistance area, so I want to sell my position. So I'm thinking of selling the position, but coming to find out that that wasn't even a valid resistance area. So here I'm going to go over the SMTM lines of support. This right here is a green SMTM line. When I see this, this tells me that the trend is bullish. So not only am I know that I'm above major support, I know the trend is bullish and I shouldn't be shorting this market. And I combine this information with multi-time frames. This is what allows me to buy at certain points and knowing what I'm buying at. This right here is just actually major support. And I'm just giving you a brief definition of these. So this is major support. So this tells me that prices is currently making higher highs. And at any of these events, I want certain price patterns to happen at these events or see certain volume action also at these events. So not only does this tells me the trend, but it also tells me at this point and my next line, which us as SMTM traders, this is support 1 and this is a support area. And at this point, this is where we most likely have a downtrend, and this becomes a support area. So price action at this event and price action at this support area requires two different events to happen. So you wouldn't treat this support area the same way you treat this support area, and this is why we must really classify these different type of support areas because they require different price patterns to buy at these areas. You have to have different expectations. This is also S2, which is support 2, and this is semi mostly of a range type support. And then we have S3, and this is in a sense when support has made a higher high, prices has made a higher high in a downtrend. Why are all these different names important? Each line requires a different type of price action, a different type of expectation for a target, a different type of order to play. At this area, I might be more inclined to place a limit order. And at this area, I might need maybe a stop limit order because I'm not sure if I just want to place a limit order. You know, we've heard the terminology, if prices pull all the way back, go up and pull all the way back to a support area, that's bearish. Well, in reality, that all depends on where the higher time frame is. So depending on where the higher time frame is will determine if pulling back to all the way to a major support area is a bearish event. And these are only support SMTM lines. We have the same thing for bearish, which of course is resistance SMTM lines. Now here, this is not color coded, but the first three, well actually these lines also have what we call a support area. And this will be identified by this dotted line and a solid line. And this will be a support area. So these lines also we establish because support and resistance is not exact price. It is an area of support. And as you can see, I spelled support wrong here, typing too fast, so don't pay any attention to that. But we must note that this is an area, and in this area is where we expect to see some type of price action. Then we have a tested area of support. And so we must notify this because once prices test the area, then you might need a little more information before you consider going long with this area again. Some individuals, prices might go up, and when it comes back to the support area, they might consider buying. Now that area has become tested. So when it comes back again, it requires more information. The same amount of individuals that were here prior to it becoming tested, those buyers might not still be there. So we need them once again to show us the money at these SMTM lines to see if they're willing to step up again. And the reason these are called SMTM lines because these are all points where buyers have showed us the money before. They have showed us that they're willing to step up. So I'm not going to be the first person to put my money out there. I need prices to come to a SMTM line so I can take my option to say, hey, this is where they showed us the money before. Will they show us the money again? I don't buy at arbitrary points. And here, this is what we call a point of reference. This is not a support area yet. This is just a point of reference. So depending on what price action happens at this point will determine what type of line this will become. So this will become one of these lines, or this will just completely become negated. Now I left off one thing here which I'm going to add. Now this is, we also use, this is a supply and demand area because it is supply and demand in these areas, and we note these specific areas on the price chart based on candlestick patterns. We can tell which area is supply and demand, and these are majority roadblocks in the road when they're against the trend. Roadblocks in the road when in alignment with the trend. When against the trend, then they can act as strong areas of also support. So we must note these supply and demand areas because these areas require different actions before you can buy. And so as going through and interpreting price, I had to learn that why buying at one support area was different than buying at another support area, because I would lose faith in my trading when this pattern or play wouldn't work at this area, and then another time it works. And so it's because different market environments and different trends create different type of support areas, and this is very important to know. And so this what allows a SMTM trader to pick and choose his points of entry and choose his points of targets. So I don't do measured moves, I don't do any of that stuff, and all I do is see where these lines are at and decide if it's been tested, not tested, what I'm buying, what price pattern do I need to see at these lines, and how much do I want to take off when prices reach these lines of resistance. So this is how I use no indicators and how an SMTM trader interprets price. Now this was just a brief overview. It's a lot more information to these lines, but I just wanted to go over because I did receive a few emails. Okay, traders, to next time because I'm about out of time now. Talk to you later, traders.